The Nuburu Inc. BURU stock currently trades at $0.4133 per share as of 9:37 a.m. EDT on October 27, 2025, reflecting an intraday gain of 33.32% from its previous close. That colossal single-day pop is a staggering number, especially for a microcap name, and it immediately sets up a major tension between expectation and reality for anyone watching this ticker. The immediate expectation, naturally, is a fundamental shift, a major commercial contract, or perhaps even a deep-pocketed acquisition offer. Because how else do you justify a move like that in a company that has been fundamentally challenged? The deeper reality, however, points to something much more complex and, frankly, much more volatile, rooted in a highly speculative, low-float environment where a series of recent strategically angled press releases are meeting extremely high short interest. This isn't just a simple technical bounce, it's a high-stakes battleground driven by corporate maneuvering and retail trading fervor, a world away from the steady-as-she-goes momentum of a Tesla stock or Apple stock that many people follow. The common understanding of Nuburu is often tied to its initial identity, a pioneer in high-power, high-brightness blue laser technology designed for advanced industrial applications like welding copper in EV batteries, 3D printing, and manufacturing components for consumer electronics. That's a legitimate, potentially high-growth market, but the reality is that the commercial adoption and scaling of that technology have been brutally slow and capital-intensive, leading to minuscule revenue, around $152,000, for the full year 2024, and significant sustained net losses like the roughly $34.5 million loss for the same period. This poor commercial performance is the key reality that directly challenged the early-stage high-tech expectation. Now, that entire narrative is being scrambled. What you're seeing now is the market reacting to an aggressive, almost frantic corporate transformation into the defense and security sector. Over the past few weeks, the company has announced a dual CEO structure, resolved a technical NYSE compliance issue, and most crucially, executed a series of strategic maneuvers, creating Nuburu Defense LLC, announcing an agreement to acquire an Italian software company named Orbit for operational resilience solutions, and just last week, revealing a strategic framework agreement for a controlling interest joint venture to develop next-gen drone technologies with Maddox Defense. This is the new expectation the stock price is feeding on, that Nuburu is shedding its slow-moving industrial skin to become a fast-paced, high-margin defense tech player with potential multi-million-dollar contract opportunities in the NATO market. Looking closely at the recent stock movement, the dramatic spike today, and the substantial volume of over 28 million shares traded in the early hours, tells a clear story. This isn't long-term institutional buying, this is classic speculative trading. The average daily trading volume for the past 30 days was already high, around 250 million shares, which is extraordinary for a company with a small market capitalization. Today's action is an acceleration of that volatility, fueled directly by the drone joint venture news and the expected $100 million in annual revenue by the end of 2028 projected from the venture and cumulative revenue of about $165 million across 2026 to 2028. The jump is also a likely result of what's known as a short squeeze. The short interest is high, with some estimates putting the short interest as a percentage of the float above 25%. When positive, albeit speculative, news hits, short sellers rush to cover their positions, forcing them to buy shares, which then turbocharges the upward price movement. The short sellers' expectation was that the company's financial weakness and slow burn would continue. But the unexpected pivot and headline-grabbing defense contracts have temporarily overwhelmed that bearish stance. We see this kind of rapid volume spike more often in highly speculative corners of the market, a far cry from the more measured, fundamental-driven buying you'd see in a stock like Nvidia stock, following a strong earnings report. The key point here is that the price is moving on potential and narrative, not current verified sales figures, which introduces extreme risk. The market is excited about the defense pivot, a clear attempt to capture the high margins and guaranteed contract flows typical of that industry, but the reality is that the definitive joint venture agreement for the drones isn't even finalized yet. It's due by mid-December 2025, and the Orbit acquisition is a phased transaction with complex milestones. The shift to defense is a calculated, high-risk strategy driven by the company's management, particularly under its new dual CEO structure. The old Nuburu was essentially a laser hardware company. The new vision, anchored by the Defense and Security Hub, is an attempt to build an integrated defense contractor, combining blue laser technology for advanced manufacturing with new capabilities in SaaS operational resilience, Orbit, and drone systems with Maddox Defense JV. This is a strategic move to access a much larger and better-funded addressable market, specifically targeting government and NATO contracts. The core blue laser technology itself, which enables faster and higher quality processing of highly reflective metals like copper and aluminum, is valuable in the context of defense manufacturing, especially for things like lightweight missile casings or advanced thermal management systems. And it's important to remember that the company has a substantial IP portfolio with over 220 patents granted or pending. However, the current reality of the balance sheet, with total liabilities far outweighing total assets and a very limited cash position, means the company is heavily reliant on securing new financing, often through equity fundraising or convertible notes. This continuous reliance on issuing new shares to fund operations and acquisitions, despite the aggressive optimism, remains a significant drag due to the constant dilution it poses for existing shareholders. It's an unavoidable aspect of investing in a speculative microcap. You're not getting dividend payments or buybacks, you're funding a long-shot turnaround. A completely different risk profile from setting up something like a Schwab Intelligent Portfolio or using Fidelity's suite of low-cost Fidelity ETFs and Fidelity mutual funds for conservative diversified growth. For those using an individual brokerage for self-investing, the sheer volatility here is a cautionary tale. The institutional picture for Nuburu reflects its high-risk nature. Institutional ownership remains extremely low, at barely over 1%, with the largest holders being passive index funds like Vanguard Extended Market Index Fund Investor Shares and Fidelity Extended Market Index Fund Investor Shares. This means the institutional herd has largely steered clear, viewing the company as too early stage, too loss-making, and too thinly traded for their mandates. The price movement, therefore, is overwhelmingly driven by retail investors utilizing platforms like Robinhood and its Robinhood stock trading interface, which facilitates rapid, high-volume trading of low-price shares, and other online investing platforms. The high short interest and the sudden positive, albeit speculative news cycle, create the perfect storm for social media-driven speculation, a dynamic that can lead to parabolic moves one day and steep corrections the next. For people who practice invest online through platforms like SoFi Invest or Interactive Brokers, the decision to engage with a stock like BURU is a purely speculative one, separated entirely from fundamental valuation metrics. The company's valuation, if you even attempt to calculate it based on its non-existent revenue, is absurdly high, trading at an EV/sales multiple in the thousands, which underscores that the market is valuing the idea and the potential of the defense pivot, not the current business. Looking ahead, the future outlook for Nuburu is binary. Either the aggressive pivot to the defense sector, fueled by these planned acquisitions and joint ventures, secures major government contracts, or the company continues to bleed cash and is forced into deeper dilution or worse. The Q3 2025 earnings release is on the calendar, and it will be the next major flashpoint. The market's expectation will be for concrete updates on the Orbit acquisition, the Maddox Defense JV timeline, and crucially, any new, non-speculative revenue guidance tied to the Defense Hub. The reality is that even the most promising defense ventures take time to materialize into meaningful revenue. Large contracts are often structured over many years, not quarters. A failure to show tangible progress or a deeper dive into the cash burn reality will likely cause a massive unwinding of the recent short squeeze momentum, bringing the stock back to its fundamental low-price valuation territory. The catalysts are clear: the finalization of the drone joint venture by December and the full integration of the Orbit acquisition. If those milestones are hit, the narrative of a successful strategic transformation is reinforced, which could sustain a higher price floor. The primary risk remains liquidity, cash burn, and the potential for a failed execution of this complex pivot while the original laser business languishes. Comment below how many shares of Nuburu Inc. you